Welcome back to the Hemlane Hustle, the podcast where we bring together the brightest minds and the boldest thinkers to talk about building financial freedom and thriving in today's fast paced world. I'm your host, Dana Dunford, and today we're diving into a topic that's a little outside of the realm of traditional real estate, but equally important for anyone looking to diversify their investments and secure long term wealth. Joining us today is Troy Eckerd, CEO of Eckerd Enterprises. Troy has spent over 38 years building a reputation as a leader in the oil and gas investments, helping everyday investors like you access opportunities traditionally reserved for the big players. Today, he's here to share his expertise, offer insights into navigating the volatile energy market, and maybe even challenge us to think differently about how we build our portfolios. Troy, welcome to the show.
Dana, thanks for having me on board. I really appreciate it.
Great. Well, from your accent, I think most people can tell that you are from Texas. But tell us a little bit about your journey into oil and gas investments and what led you to found Eckerd Enterprises.
Well, it'll be 41 years this May, so it's been a long 4 decades of expertise. But I was in college studying economics and finance, starving to death, living in a travel trailer, holes in a radiator in Central Texas. And my stepbrother had a small investment firm that was placing investments with high net worth investors who wanted tax write-offs into drilling oil and gas wells. And so he asked me one summer, he said, would you like to come up, maybe get your license? And if it works out, you can finish college up here in Dallas. I said, look, I'm starving to death. I'll try it. Well, I started within about 6 months. I was the top dog in the firm. And I realized that my brother was a nice guy, but he couldn't find oil in a Jiffy Lube. So I decided to go out on my own. About 3 years later, ended up with my own investment firm. I had that for about 22 years. And I became very, very good at understanding the dynamics between what investors want and how to deliver that product in the energy space. And then I ultimately started my own oil company in 1995. And so I've been generating and providing drilling opportunities, acquisitions and mineral rights, pipelines, and pretty much everything to do with the oil and gas space other than the refining component. And so after 41 years, I think I perfected a dance between what investors want to see in the energy space and how to deliver that product for them. And it's been a great career. Now I run my own family energy business. I collapsed all those businesses under Eckerd Enterprises. Now I have my son-in-law as the CEO. My other son-in-law is in charge of business development. My son's the engineer. It's a family-run business, and we've just had a great time. We're making a lot of money for a lot of clients.
That's awesome. And for those out there who don't understand mineral rights, dumb it down to our level of what exactly are mineral rights and then how do you get involved with it?
Well, I'm going to make it real simple. Back in the beginning, when the U.S. started giving out real estate rights, you went out with a horse and stuck a flag in the ground, and you got 1 square mile or 640 acres. That was your claim. Unbeknownst to anybody that did that, they actually were given 3 rights as it perpetually became more mature. And that is, you were given air rights, surface rights, and mineral rights. Air rights is everything above that 640 acres, not attached to the ground. Surface rights is everything attached to the ground in that 640 acres. And mineral rights is all the natural resources below the ground in that 640 acres. Each right is a tangible real estate right. They can be sold in part or in total. They can be sold separate. They can be leased separate. So basically, I had 3 things I could either lease or sell. And so what you find today is many landowners, like in the building in your background, they had no idea that building, probably, unless the seller was smart, came with mineral rights. You say, well, nobody's going to drill an oil well in a city or behind it. But Dallas-Fort Worth was a prime example of people not paying attention, because the largest natural gas field in North America being drilled horizontally is the Barnett Shale under Dallas-Fort Worth. The airport of Dallas, DFW, has oil and gas wells all over it because of horizontal drilling and shale plays, and the DFW airport had the mineral rights. So they make millions of dollars a year from royalty payments on oil wells sitting right next to runways. So the reason why it's so important for real estate investors to know about mineral rights is I look at every single contract and go, am I getting the mineral rights? And I always ask for them. I want any and all mineral rights you have that comes with this property. There are homeowners associations in Dallas where KB Homes or some home developer didn't keep the mineral rights. And these individual homeowners are getting gas checks for the last 25 years for their one little house they had for their proportionate share of the gas being produced 2 miles away. So it kind of changed the mindset because you don't know what you don't know. So you want to make sure you're paying attention to mineral rights.
That is super interesting. So let's go back to the airport. The
Yeah.
airport makes a ton of money off of the mineral rights below them.
Yep.
And you can still have the runways over it. They make the money. So the airport, shouldn't it look a lot nicer with all that money, the additional money they make from it?
Nice is nice, right? But so what happened is Chesapeake Oil and Gas realized that
Yeah.
DFW Airport, which is I think 20,000 acres, was sitting right on top of the main corridor where the gas field was being developed. So they went in and said, "Look, I think they paid them 25 or $50,000 an acre for a lease. So you multiply that times 20, so it's like a $400 million lease agreement." And they said,
Wow.
"For every well we drill, we're going to give you 20 or 25% of all future income free with no liability." And the airport says, "Thank you for that big windfall." And so those
Yeah.
wells have been online since like the late 1990s, early 2000s. They're still online after 25 years, and there's still dozens, if not hundreds of more wells that can be drilled in that area over time. And this was part of the evolution of the oil and gas industry in the United States, where people realized before horizontal drilling, you were like throwing a dart at the board, right? The geologist,
Yeah.
the geophysicist would pick the exact location. You crossed your fingers, you drilled the well. If it didn't work, not only was the well dry, but it probably condemned the mineral rights value because now people believed there was no oil and gas under that mineral. Very
Mhm.
risky. Today
Yep.
it's different. Today you have these buried Grand Canyons, the size of the current day Grand Canyon, covering 40 million acres. You're going to drill every well, it's going to find oil and gas. It's just a question of what the financial return is. So it really opened up mineral rights as a viable commodity and a viable asset class that high net worth investors could invest in. The problem is they needed somebody who knew how to drive the car. They needed the expert to tell them where to buy, what to pay,
Hmm.
how to manage it. So you can walk in a truck stop in Oklahoma and it has mineral rights for sale on the little board as you go to the ladies and boys room, right? Because
Yeah.
you can buy minerals anywhere you want. Does it have oil and gas under it? Maybe. Most critical thing is, will somebody else spend $10 million and drill a well on your mineral rights? That's really the key. Who
To
will
find
drill it?
out.
Who will drill
Yeah.
it? And how competent they are. So it's a fun business, and it's all evolved in the last 10 years, really. And those that are paying attention are making a lot of money off mineral rights that were not available 10, 15 years ago.
This makes complete sense. And so with Eckerd Enterprise, are you guys going out and leasing the land, just the mineral rights, and saying, hey, you've got a property. I think there might be some oil and gas under there. Let me lease just the mineral rights. Is that how it works? Or are you actually owning the entire property outright?
So a couple of things to keep in mind is that I'll be 61 this July.
Okay.
You get really lazy and smart the older you get. So
Okay.
I used to be the guy that would go lease the minerals, and I was the guy that wanted to drill the well. And then you get the risk of the cost and the labor and the cost
Hmm.
overruns and the liability. And when I saw the mineral rights evolving because of this new technology of horizontal drilling, I said, I don't want to drill wells. I want to be the house like the casino house or owner in Vegas. I want to own the casino. I want to own the mineral rights, and I want Exxon to be my lessee. I want Chevron to be my
Ah,
lessee. I want to be the owner, and I'll let them go spend the millions of dollars, take all the risk, pay all the bills. I just want them to send me 15 to 25% of all the money they make for the next 50 to 100 years every single month. I don't want bankruptcy to get in the way. I don't want expenses in the way. I don't want any liability. Just send me my 20 or 25% revenue every single month for every drop you produce. So I shifted to the headwaters of oil and gas. Whoever owns the minerals gets paid first. Whoever owns the
yep.
minerals get paid above all expenses. And I said, you know what? That's the position I've always wanted to be in. So being older, more mature, and a little less enthusiastic about risk, I said that's the direction I'm going to take my investor base, and that's what we've done.
I love that. And that actually just brings me to the next question because I know oil and gas investments can be very volatile. There's a ton of risks with it. And so you saying, yeah, we get paid out first, et cetera, makes complete sense. How else do you manage the risk? And then a follow up question to it, is there ever a point where you get the mineral rights and then you have Exxon drill down and they're like, nope, there's nothing here? How do you deal with those situations?
Well, two things. Have you ever watched the movie There Will Be Blood, Daniel Day-Lewis?
No, I haven't.
You should watch it because
Okay.
that's what 99% of most investors think the oil and gas business is. They think it's two guys cutting a deal, drilling a hole, praying for the oil to squirt out of the ground. One's dry, one's good. That's not how it is today. Today, if you think
Okay.
about Tesla and Elon Musk, that's the oil and gas business. The way it works now is we actually have computer chips sitting about 30 feet behind the drill bit. We're using triangulation with satellites to guide that drill bit within inches of a target zone that's 4 miles in the ground, 2 miles down, 2 miles out horizontally. Guys sitting in rigs now with computer screens, not two guys with 3 fingers missing counting pipe. We now have people in Denver and Houston and Dallas looking at that computer screen, guiding that drill bit, engineers telling them what to do. All the production in the field is being done by satellite off a solar panel, sending information 24 hours a day. So those wells are being watched by dozens of production engineers, reservoir engineers, 24/7. And so when you said the word volatile, it's not volatile. That's the
Ah, okay.
problem. The
Yeah.
problem today is it's the largest land play happened in the United States history, because you're talking 200 to 300 million mineral acres now are known to have billions of barrels of oil and trillions of cubic feet of gas present. So I don't drill a well going, I hope I hit. We'll go participate in a well that we believe is 100% going to hit. It's just a question of quantity. How fast do they get it
Okay.
out? How much is there? So this is more of a harvesting opportunity, not an exploration opportunity. And how we offset that is because of the internet and because of what's happened in the last 10 years, you never knew what Exxon did when they drilled a well. You never knew what Chevron did because all the information was private and they filed in the courthouses, and you had to go to every single courthouse to get the data. Today, there are services that gather and scrape that data. They put it into software platforms, and I've got my engineers back there. They can take 500 or 5,000 wells in a given area. They can dump it into a data system, and they can tell me within degrees of accuracy which well produced the most, which one was drilled which way, how it was completed, how it was fracked, how it was drilled, compare Exxon to Chevron. And then we get to determine based on what we want to buy, are we better off buying minerals under Exxon or buying minerals under Chevron? We buy minerals under Oventive. And so no longer is it a volatile or a guessing game. We don't have to worry if there's oil and gas. We only buy, Eckerd only buys producing minerals, which means it's already been proven, because there's no sense in taking a risk. I got oceans of oil, 200 million
Yep.
acres of minerals. I'm just going to buy underneath the producing wells that already exist, knowing it's like buying a pen of pregnant rabbits. I bought the rabbit, but she's going to have 9 babies. I'm buying a well, knowing it's going to have 9 more wells drilled. It's just a matter of when
Yeah.
they decide to come. It is really, really the biggest risk in oil and gas, and this is 100% accurate. It's the who. There are so many crooks and liars and criminals and Ponzi schemes in oil and gas because the average investor knows nothing and they won't do their homework. They look at the pretty picture and the Texas swing and they invest $1 million, go, what happened to that guy? Well, he was a crook to start with, and you just gave your money away because you didn't do your homework. So this is not about gambling in Vegas. It's about a serious investment that you can invest in for decades. It can make you a tremendous amount of money, but it takes the most minimal due diligence to figure out the path you're going to take.
Yeah, I love that. And I love the details you're going into with engineers because I think it's very similar to what we see in real estate.
Of course.
There's a lot of crooks. I don't know why real estate has a lot of scam artists out there. And so proving it wrong and actually showing that, hey, there's some really good people who are mitigating the risk on the investment side makes sense. You spoke about Elon Musk. Talk about thoughts on renewable energy sources. Talk about oil and gas having a sustainable future. Where do you think that's going? Obviously, with the recent presidential election, I believe there's going to be a lot more coming to the U.S. on the oil and gas side. But tell me a little bit more about how you look at the future and your role on that, just in general for energy sources and how we fuel the economy.
Well, if you think about it in simplistic terms, the whole world has said oil and gas is the boogeyman, causing climate change, killing the world, plastics everywhere.
Mhm.
So the oil and gas industry has probably been under the highest level of scrutiny in the history of oil and gas the last 5 to 10 years.
Yep.
Some of the safest wells, cleanest locations, most incredible effort in due diligence and efficiencies have been put into place from Exxon all the way down. What really has happened is the boogeyman has been this green energy deal. It's always been a false. It never existed, never has. So what's happened is that we had this redirection, interference in the free market by directing money toward alternative energy that really made no economic sense. And so if you were to take
The windmills.
the windmills, the solar panels, the hydrogen, et cetera, if you took all
Yeah.
those and took a base unit of energy compared to base unit of energy for, let's say, a barrel of oil, oil would have to sell for $150 a barrel to make those energies equal without subsidies. So what you
Wow.
had was you had this enormous false $10 trillion green energy that has been proven to be uneconomical. So it's falling apart. You'll see more windmill farms and solar panel farms go broke in the next 12 to 24 months now that President Trump's removed the subsidies. So if you took it to the individual consumer's level and said, okay, Dana, you and
Yep.
Troy have a building, Here's your bill. You can pay in oil, you can pay in solar, you can pay in windmills, you can pay in nuclear. Here's your bill. It's $100 of oil, $400 the windmill, $400 of solar, or $500 the other one. Which one are you going to pay? You go, oh, I want to save the planet, but not this month. I'll take the
Not this
oil.
month.
So
Yeah.
so economics, free markets always come to roost when you stop interfering with it by artificial stimulation that doesn't make economic sense and cannot be sustained. So the sustainability of fossil fuels is it's the most transparent, easily accessible, most abundant resource to the United States and will be for the next 200 to 300 years, period.
Yeah. I love that. I couldn't agree more on the efficiency of it versus the alternatives. Let's talk about nuclear though. So scientists say that that's about 10 years out. But now, I mean, some scientists are saying it may come sooner. What's your thought on nuclear?
Vladimir Putin. So when the Ukraine war started, what was the very first thing Putin went after in Ukraine day one of the war? He attacked the nuclear plants. Why? I don't like any energy source that any obstruction to the safety of that source can be terminal to the point it could literally kill millions of people. More importantly, is it could alienate a geographical area that could cover thousands of miles.
Mhm.
So I understand and appreciate the economies of nuclear, but look at Japan, you look at Chernobyl, and you say to yourself, but what if? What if that nuclear reactor has a leak? What if we have a problem? What if we have a tsunami like Japan did? And so for me, if I have a reliable energy source like fossil fuels that are put in pipelines and that can be contained the way it has been, I mean, how many times do you have a year you hear about an oil pipeline leaking in the United States? Maybe one. How many times do you see a
Yeah, not
refinery in
often.
the US blow up? Maybe none. How many times do you see certain aspects of the oil and gas industry causing some kind of catastrophic event? You actually had a chemical byproduct from a refinery in a train in Ohio that caused problems, such as chlorine, but you're not talking about the traditional oil and gas. It's some of the safest energy sources in the world. So nuclear to me is a great energy source for economically if it were in somebody else's backyard. You know, the first thing I looked at when Putin started the war and we had all this invasion from the South and the immigration border, I said, you know, one of the things that concerns me is we have a dirty bomb. So my wife and I looked online and said, okay, if there's a nuclear bomb in San Antonio or Dallas, the trade winds put the cloud of the nuclear bomb where? And we said, okay, we got to go north and northeast in order to get out of this is stupid. I don't want to have to live my
Yeah.
life with an energy source that says you might make the state of Texas and Oklahoma never to be lived in again for 300 years. That's not an energy source I think is viable. I would take it off my
Yeah.
list. Off my
Anyone listening to this comment on that? I think that Putin's story was probably a pretty good one of, hey, if there's ever a war or something like that with the US, how do you make nuclear safe? So I'm actually very interested to hear what our listeners have to say. All right, moving on, I want to talk about investors. So who is your ideal investor and what should they know before considering oil and gas as an investment vehicle and being able to just get access to mineral rights, which you provide to them at such an ease of use?
Yeah, I would say that if I had a room of 1,000 accredited millionaires in a room, $1,000 million net worth or higher,
Hmm.
I gave a presentation on oil and gas, 50 would stay that say they're interested, 950 would walk out of the room. 950 would walk out without getting any facts or any understanding because they don't understand it. They don't want to understand it. They see no value in it. So therefore they have a closed mind to it. So
They're
950,
lazy.
that leaves me 50, right?
Okay.
Out of the 50, if I talk about minerals, maybe 20 would entertain investing in minerals because it has no risk. It's cash flow every month. There's no holding
Hmm.
cost. You can put in your self-directed IRA. It's a no-brainer and you're the headwaters. When it comes to exploration, maybe 5 or 10 would be interested because it's just like Vegas. The reason why 90% of the tables are empty in Vegas is people don't like to gamble. They just don't care to gamble. Only the psychos gamble. I would even say that probably 75% of my investors, which we have about 2,700 accounts, I'd say 75 or 80% don't gamble, but they're in energy. So I would describe my investor's profile as being an individual who has a high income. They've accumulated probably north of $5 million in assets. And what they want to do is they want to build a portfolio of passive income that replaces their current income and that will last longer than 3 to 4 to 5 years. They're tired of these, buy a multifamily, build it up, get the NOI correct, and then flip it. Now I got a tax run, I got to replace the money.
Hmm.
My investors are looking for something that can last for decades. They don't want any cash calls. They want no bills. They want simplicity. And so I would say my investors are very much entrepreneurially minded. very self-directed. Very, very few of my clients have a financial advisor. They do all their decisions themselves. They're truly contrarians. And the cool part is that once they start to dig in, they really learn what we do because we send out tons of educational information. We have our own transparent app called Eckerd Insights where you can learn everything you want to know about oil and gas. We provide that. Once they learn it, they go like, why the heck was this not around years ago? Why did I not hear about it years ago? Because it wasn't available 7 or 10 years ago. And the other side is 9.9 out of 10 people in energy investments are crooks.
Yep. Do you think that is why, when you said most of these people don't have a financial advisor, do you think those high net worth individuals with wealth managers, I'm talking about those with 100 million in assets plus, they have a wealth manager, and the goal of the wealth manager is a lot of times to just say no to a lot of things and put it in things that are super conservative. Do you think that is why someone with a financial advisor doesn't go to you? Or kind of talk me through why those who have finance advisors, like why aren't the finance advisors lining up out the door to get access to this?
Because financial advisors can't figure out how to make a fee. So if I've got $100 million and I tell you to put $5 million in Troy's Minerals, my first question is, I no longer have 100 million in assets under management making my fee. I have 95 million. And if Troy's assets do really, really good, like they have been, I'll take another 5 or 10 million out. So there's no commissions, there's no kickbacks, there's no fees, there's no under the table. So to be a true financial advisor, you got to say, look, I think you should take 5 million out of your 100 million. I don't care about my fees. That's a good investment. They're not going to do it, right?
They're not, yeah. So
the other side is I just put this on a post last night on LinkedIn, so that's why I'm not that popular. I said some financial advisor was bragging about having a 30-year mindset, and the guy looked like he's about 35. And I said, I'll tell you what, why don't you tell the crowd your age? Why don't you show us your net worth? Why don't you show us your portfolio allocation mix? And then show us your track record the last 30 years of what you've done for your clients, because you're bragging about a 30-year portfolio and you look like you're about 35. And the truth of the matter is 95 to 98% of most financial advisors could not pick a winning stock if there was only one winner and only one stock in the race, because they only focus on fees and assets for themselves. I've had friends that are financial advisors. They were moving money in and out of people's accounts, breaking the law, unfiduciary acts, etc. It is incredibly hard to find a good financial advisor who truly has the basis of that investor. It's really about, what do I put you in to get me my fee so I can make 500 grand to $1 million a year? And they assume that because you have $100 million, if I screw you out of 5 million, I'll make some bad decisions. If I blend it all together and make you 7%, you're a happy camper. Okay. That's not what my clients do. My clients can make a better return on their own than paying somebody 1.5 to 2% basis points on a fee managed account that even if we lose, they make money. They don't want to do it.
Yeah. It reminds me of the random walk down Wall Street, and that with all these fees and mutual funds and everything, just it's a lot of people making money off that. Can you share concrete examples of returns for your investors have seen? How much cash flow do they get? Let's just say I put $10,000 into this. What could I expect?
For $10,000, you wouldn't be a partner. So let's use 100,000. Okay.
100,000. What's the minimum?
Okay.
What's the minimum?
Minimum on any of our investments is 25,000, but we basically say, if you're not willing to put $250,000 in, we're not going to open the account, because I can't build you a brick house if you can afford one brick. So
yeah, makes sense.
We'll go forward with 100,000 as an example.
Go to 100,000. Yeah.
Yeah. All right. So basically the way we do it, we buy different mineral parcels under different oil companies. We put them into a blended portfolio. Let's call it a $10 million portfolio. You put 100,000 in, so you got 1%. You'll own a piece of all those minerals, and they cash flow starting about 6 months after you make the investment. It takes that long to file the title, tell the oil company own it, they give us revenue. Once you start revenue, you'll get a check every month for probably the next 25 to 50 years, okay? What we project and the way we develop our minerals is we're looking to make double-digit returns every year for 5 years, but we far have exceeded that. So right now, our average portfolio across all of our portfolio, which is probably 100+ portfolios, is over 13% cash on cash. Our drilling programs are averaging over 30% returns per annum, cash on cash. And we believe that by the time we finish this year, 2025, we'll have sent out close to $250 million in the last 6 years. Last year, we sent out, I think $64 million last year. I think we're on target this year for $75 to $100 million in distributions in 2025. This is cash out the door. So the good thing for us is, because we're a cash-driven business, is our clients get immediate results. You invest today, you get a check by May or June, and it's every single month. Check goes up, check goes down. There's 10 less days in February. When you get your check in April, it's got 10% less because you had 10% less days in February. We get paid 60 days in arrears. If you
Okay.
go and oil prices jump up to $129 a barrel in April of 2022 and Vladimir starts the war, your next 8 months checks are like up double because you're getting paid more for gas and for oil. And so you go, thank God I'm in the deal. The
Yep.
good thing about it is that there's not a single delay. There's no delay. There's no expenses, no reduction because there's no expenses. We don't even charge a management fee. We just say we buy it for $1. We sell it for more than we pay for it. You pay one-time cost. It's yours. You own it. It's titled. It's in your name. You have a purchase sale agreement. You own it in perpetuity. And the one thing we did that nobody else has done in the alternative space, no one, we created our own peer-to-peer marketplace on our app that says, I need to go sell 200,000 of my minerals because I want to buy a new lake house, or I want to buy a new apartment, or I want to go take a trip. We created the peer-to-peer market. You can go online and say, I want to sell 200,000. And we got 2,700 accounts that are willing to buy your minerals at the price you set. And we set that up about a year and a half ago. It's a phenomenal asset that we created. We're building on it every day. I do everything in my company the way I would expect to be treated. I want to invest. I want clarity. I want transparency. I want frequency. I don't want any nonsense. I want accuracy. I want
Yeah.
customer service. And I want to know if I have to get out for some part of it. I have a way to do that.
I love the liquidity because I think, whether you invest in startups, whether you invest in real estate, having liquidity at the time you want it and making it as easy as pressing a button. I think investors are very interested in that, of like, let's bring everything to the 21st century and make it where it's just easy to do business. So
They-
I love that. Remind me how you guys make money off this. So you don't have those fees. So where are you guys making the
We,
money if I put
we,
you 100,000?
we make money on the spread. So we'll go out and let's say we
Okay.
buy 20 tracts of minerals. One tract might be $7,500 per acre because it has a producing well, but there's no indication any more wells are going to be drilled in the next 12 months. So we buy it at a lower cost. We know it has a lot of future wells, but we're not certain on the timing. We'll buy another tract that has a well producing, but there's 4 wells being drilled right now. It's fully entitled, cash flow coming in 9 months. We might pay $14,000 an acre for that. We buy and we blend, and our average price to our clients might be $12,400. We make more money in the lower acres, make a lot less money. In some cases, we sell the minerals cheaper than we bought it, but that blended average gives us a spread, which makes us our fee. We run our business on that fee, and then we buy more minerals utilizing that capital and that fee. So our goal as a company was, our goal internally is buy minerals at a price and deliver them to our investors cheaper than they could go find them in the field. And
Themselves, yeah.
So in other words, we absorb our fee by being great negotiators. And so we still have petroleum engineers, presidents of oil companies. We've got geologists, geophysicists. We have industry people buying with us. And I always say, why in the heck are you? I mean, we have landmen. Why are you buying with me? They go, I can't find your quality minerals at your price. I go, what? They go, no. So what happens is, because we're a cash buyer, we have all this inflow of opportunity. We say, that's fine. You want 14,000 acre? We'll give you 9,000 acre, but we can close in 7 days. And they know we're going to close. We've never missed a closing in 6 years. So because of that aggregation capacity, because we buy $15 to $20 million a month, we're getting unbelievable minerals at great prices because they don't have anywhere else to go. That gives our clients the chance to own those minerals at a price they could otherwise never find.
Yeah. Who are your competitors? Is anyone else doing this with like a retail investor that has, a couple million in assets?
Every Tom, Dick, and Harry's out there. I mean, you can go to a gas station and find minerals for sale. So we have these one-offs. A guy buys 100 grand, 200 grand, $1 million. Hell, I'm suing 5 of my clients right now who stole my data. And they went out and tried to buy a bunch of minerals. I'm suing them for $100 million because they said, "Hey, Troy, you got a great mousetrap. We think we'll copy and imitate." I said, "Okay, great. Let me sue you." So your competitor really is not a competitor. And let me tell you why. It's real important. There's a lot of private equity that buys minerals, and they have this suit-wearing New York team. They couldn't tell you which way a drill bit turned. So what they do is they throw $100 million out and they try to buy under different drilling companies. And they say, we're going to buy it. They don't know the price point. They overpay. They really don't know the maturity. They don't have an engineering team. They don't have a geologist. They don't have a technical team. Our whole business model is technical. We have in-house geologists, engineers, landman, accountants. We have a fully integrated oil company. We have almost 60 employees. And we also have an exploration company, so we know the drilling. The biggest reason I think we're successful is I've got 40 years of drilling. So in order for you to know what minerals to buy, you need to understand Exxon and Chevron and all the different oil companies, know what they drill, where they're drilling, how many wells they drill, why they're drilling, where they're drilling, where the results are better. So if you've been on the drilling side, you actually have walked the walk, talked the talk. So now when you buy minerals, they're going to move that rig from this location to this location. We can buy those for $8,000 an acre. In 6 months, it's going to be worth $14,000 an acre. We need to buy those now. So that advantage of 4 decades of knowing drilling puts me in the leader's position as a cash buyer. We're the #1 mineral buyer in the state of Oklahoma, have been for 4 years. We buy more minerals than anybody else cash paid for.
Wow. And that's in Oklahoma. What about Texas? How many people are buying there?
Texas is like going to Beverly Hills. It's the big dance. Everybody wants to be in Beverly Hills.
Yeah.
Everybody in New York has to be in the Permian Basin. We've got great assets in the Permian Basin. But for us, we're not even a sand granule because there's 500 buyers for every Troy in the Permian Basin. It's not that
Okay.
competitive in the Anadarko. For every mineral I buy in the Anadarko in Oklahoma, it's about 5 times more expensive in the Permian because it has more reserves, more zones. However, we now have amassed probably $250 million worth of minerals in the Permian. We have unbelievable mineral rights in the Permian because many sellers out there say, I don't want to go to an investment banker. I don't want my neighbors knowing I'm selling and going to make $40 million. So we have a network of investment bankers who say, look, Troy, the seller's private. They're going to ask for 2 bids. You're one of the 2 bids, cash buyer. They want to close in 60 days under confidentiality. And we'll make our bid. We cash close in 60 days. We did that last March on 2 key assets for about $75 million. That is probably going to be our best cash flowing mineral portfolio. We have 96 wells that have been drilled by Exxon and Diamondback. That thing is going to be a cash cow like no tomorrow. They came to us, private sale, 2 bidders. We won the bid. We closed in 45 days on $75 million. Boom, done. And that's just going to be a hoss.
Yeah, that's incredible. Tell me about I know the return you said double digits, 13% plus. What would have to happen or what would potentially happen? Maybe it's a small chance that would go to single digit year-over-year growth.
Well, keep in mind, oil and gas is a depleting resource. So what happens is every day the oil produced yesterday, there's less in the tank today. So if you have a declining commodity price, or you have the oil companies deciding that, hey, oil's down to $45 a barrel, instead of having that valve open to full capacity, let's choke it back halfway. Let's produce our wells slower because the price of oil's come down. That will drop supply, which ultimately does the pendulum swing where commodity prices go back up because there's less supply. So we constantly have this reverberation of supply and demand. Commodity prices go up and down. And what will happen is that if we have this degradation in the commodities and we have lower demand, maybe too much supply, your checks could go down. Well, you might be at 9 or 10%. Hell, in 2020, before COVID, Russia and Saudi pretended like they were mad at each other. They flooded the market. Oil went to negative $37 for a day. We sold more minerals that week than we ever sold, right? Because you really make your money when there's chaos in the market, right? You really make your money when you end up finding that there is a arbitrage opportunity. So we told our partners in 2020 and 2021 during COVID, said, we're in the office, we're having Uber throw food into the 8 of us that are working here.
Yeah.
And we bought more minerals and we crank, because I said, break evens at $45 to $50 a barrel, folks. We're at negative 37. We got $75 of profit to go. Let's do it.
Yeah, let's do
it.
So
that's how we built our metric. Now today, we have Trump saying, drill, baby, drill. Everybody's really worried about oil prices sinking because it's going to increase supply. It's going to decrease commodity prices. I'm sorry. But he also said he's going to pass this massive infrastructure bill. He's going to put sanctions against Iran and Russia and Venezuela. So he's going to kill 3 to 4 million barrels a day. He's going to grow the economy like never before, make America great. And guess what? Inflation's going to rage. Oil prices are going to go up. Demand's going to go up. And our poor little industry has no more rigs, no more equipment. We are maxed out on giving him any more drill, baby, drill. So guess what? You're going to see prices rise, not go down.
Yep. Yeah. Yeah. If the election went the other way, what do you think would have happened?
I would have moved to Venezuela. I honestly, we make more money when Democrats are in office because their policies are anti-fossil fuel, which cuts off supply, yet demand keeps going up. So we would have seen just complete chaos. It would have been catastrophic for LNG, liquefied natural gas. You'd have seen all kinds of regulations. They would have been opening up the door for even more aggressive things to shut off fossil fuels like the Gulf of Mexico. So you'd have seen price oil and gas through the roof, right? And that was all part of a strategy to get people onto mass transit, stop buying big cars, stop buying big houses, live in multifamily, blah, blah, blah. With the current administration, I think what you're going to see is you're going to see a continuation of more policies, more prudent infrastructure, pipelines, safer way to carry oil and gas. I think we're really going to focus on exporting LNG. I think the whole world realized you can't have Vladimir Putin be your supply of energy because he can cut it off because he likes war more than he likes energy. And so we're in a great position as a country. The problem is we've been underfunded for a decade. Banks won't lend us money. Colleges won't put their pensions or trust with us. So we're going to be pretty much self-contained the next 2 to 4 years. I said earlier in a podcast I did this morning, I said, you're not going to see money come back to oil and gas until the midterms. No one can make a 4 to 8 year investment based on a 2-year cycle. If Trump can carry the momentum of what happened on the election day, if he can carry it past the midterms and control the House and the Senate, you'll see a lot of investment dollars come back, because it means truly the American populace has decided they want to go a different direction. They're going to support that. If he loses
Yeah.
the terms, I think they're going to be really concerned that we might also, we being the conservatives, might lose the White House in 4 years. So that's why investment capital is not going to pour in. They're not going to come back in for 24 months until the midterms. They're just not going to do it. You might see
Yeah.
a dribble here and there. That means we're going to have Trump pushing this big demand of drill, baby, drill, infrastructure, expand the economy. I mean, we're going to be having semi trucks on every corner going up and down the highway. I won't even get on the highways anymore, right? But that also means heavy, heavy demand, and we have no more supply. We are drilling the very best tier 1 wells we've ever drilled in the history of the United States. I mean, tremendous wells, but we're depleting them so fast, just trying to keep up. We're like on a treadmill. You could really see oil price at $85 to $90 a barrel by the end of this year.
Yeah. Why won't banks lend to you? I know we spoke about financial advisors. They don't get a cut, so they're not interested in it. What about banks and debt financing through a bank?
Banks were told 4 years ago under Biden, don't lend or you have this fossil fuel footprint you got to put. And so it was so detrimental, they said, we're not lending. It's easier to go chase where the tax dollars are. They made all the tax incentives towards solar and wind and hydrogen and alternative energy. So all the funny money ran toward the tax breaks. All the banks said, sorry, oil and gas, we're not lending you money. And today the problem is the banks have this really bad balance sheet. They got a lot of loans coming due in real estate. They're trying to shore up their balance sheet. The problem with oil and gas is, let's say tomorrow, all of a sudden, Saudi comes out and says, hey, let's add 2 to 3 million barrels supply. Let's drop the price of oil to $40. Well, that bank lent me $100 million based on $65 collateral. Now they got $100 based on $40 collateral. They're calling me up saying, hey, Troy, you need to put another 25 million cash to pay down that $100 million
To
loan.
pay down it.
Or you're out of covenants. And I go, yeah, pound sand, I'm not doing it. So until they get their banks stronger because of the real estate debacle that's happening right now, I think we have a real problem. You're not going to see any energy lending coming from banks. And if it is, the cost of capital will be so high, you don't want to borrow the money.
Yeah, that makes complete sense. What are some of the lessons you've learned in the industry? I know I've learned so much from you right now about mineral rights and oil and gas, but what are some of the biggest lessons that you learned, or potentially the biggest mistakes that you've made?
I should have stayed in college and got a different degree.
What was your degree? What was your degree in college?
It was economics and finance, but I never graduated. Okay. I got in Dallas, started making money, and I dropped out and raised my kids, and I got grandkids. So I don't have any regrets, but I never finished college. I think the biggest regret, okay, I'll tell you the biggest lesson, not regret. I don't have many regrets, right? The biggest thing to learn from oil and gas is always found where it's been found before. So geographically, geologically, geophysically, there's only so much dead plants and animals or organic material that was deposited based on mountain ranges and valleys. And so what we've always figured out is we're always testing new areas, but if you look at the current shale basins, they're exactly in the same place we drilled vertical wells the last 100 years. Just a different formation, different location, different depth. So the lesson learned is we all act like fishermen. We stand on the dock and we throw our line out as far as we can, and then we reel back trying to catch a fish. And the fish are actually underneath the dock. So we don't have to go to Africa. We don't have to go all these other countries. We have all the oil and gas we need right here in the United States. We have the infrastructure. We're the largest consumer. So the lesson I learned getting older, I'm 60 this year, the lesson I learned is don't look at things in 1 year. Don't even look at them in 5 years. The minerals I'm buying today for $12,000 to $15,000 an acre, I could have bought 6 years ago for $1,000 an acre, 1,000. Okay. All the oil and gas we're drilling from these horizontal wells, all the 13 million barrels we're producing today, most of that coming from horizontal shale wells, 12 years ago was not viable. Economically or operational, we could not get oil and gas out of that wet concrete. So you now see a complete evolution in the entire economy, energy market of the United States based on technology. 12 years ago, it didn't exist. So the lesson learned is oil's found where oil's been found before. If you don't have energy in your portfolio, whether it's direct investing like with a company like mine, or you're buying stocks and energy, how are you going to balance your portfolio? Because a portfolio is like a seesaw, right? Oil and gas prices go up, stocks go down, real estate goes down, cost of capital goes higher, your cap rates go higher, not good news. Oil prices go down, everything goes up. If you go look at most portfolios, they don't own any energy. There's no counterbalance. What's the one way to pay off $35 trillion in debt? Inflate the dollar. President Trump's not telling you one thing he knows. I'm going to grow the economy. I'm going to pass these mandates. Inflation is the only way to get it paid off. I'm going to do top down with Doge, and I'm going to grow the economy. And that means higher inflation, higher commodity prices. from an industry that has no more capacity to give them one more barrel than we do today. Whoever's in energy is going to make a lot of money the next 4 years. The problem is you got to be a contrarian thinker, and I'm totally contrarian. If you say go left and the cliff's to the right, I'm jumping off the cliff just to prove a point.
I love that. And I
That
think
doesn't sound logical.
no, but I think all of our listeners can learn something from that, because I think, to your point, the only way to get us out of the deficit is grow, 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 or inflation, right? And that's the only way really to get us back to the surplus that we had back in the earlier 2000s.
I'm a,
So
I'm a, I
go,
want to share
yeah,
this
go
with
for
you
it.
on that point. I want to share this. It's very important. I want to share this with you. When I speak all over the country and I walk into a room, I say, how many of you were involved in the 2008 financial debacle? It used to be 7, 8 years ago, about half the room. Now in the room, maybe 1 or 2 hands. I feel like I'm talking about World War II. So my point is, no one's been through a bad economy since 2008. No one's seen a recession. No one has seen massive inflation to the 1970s, 1980s. So to all your listeners and to all these young investors, it's heyday. Real estate's doing good. Bitcoin's doing good. Everything's good. No one has seen when that light switch goes off, the catastrophic, never could happen things that happen. And you go, wow, that's what 08 was like. So those of us who went through 08, we're sitting back going, oh, no, it can happen. Trust me. The cow can jump over the moon. I need to be of that mindset. Today's generation from, let's say, 25 to 45 have not been through a downturn. They just haven't. As a
Yeah.
result, we're not living in reality. So people go, oh, inflation cannot get like that. Inflation was 21 to 27% in 1979, 1982. My mother gave me cereal with a box of powder and said, put it in water, and that's your powdered milk. I couldn't figure out why my parents were broke when I was a freshman in high school. Looking back, I know why they were broke. Who the hell
Now
could
you
have
know.
money or survived? We're on the cusp edge of a great presidential run, great ideas, great aspirations. But even when you have to get over a flu, you got to take medicine that doesn't taste too good. Somebody's going to take the medicine. I think it's going to be inflation.
Yeah. Yeah. Um, Troy, I need to get you back on the show in 4 years as well, so we can debrief on this episode. For those of our listeners who want to learn more, how do they reach out to Eckerd Enterprises?
Just www.psycho.com. You'll reach me. I'm just kidding. No, it's www.eckerdenterprises.com. If you go to the website, though, there is part of our website is called Eckerd Insights. It's purely informational. You go on, you sign up. If you want a lot of data, then you'll say I'm accredited. I want to get to all the investment stuff. You want just all the videos and information, you can sign up. But we created it for you so you can get smarter. You can always contact me by emailing me directly at teckerd@eckerdenterprise.com, or you can call my cell phone at 469-422-1781. I work about 5:30 in the morning to about 12 o'clock at night. I love what I'm doing. I'll be 61 this summer. I'm nowhere close to retiring. I'm loving what I'm doing. I'm having a great deal of fun. And I really, really enjoy working with private investors. So if you have questions, reach out to me. I'll be glad to answer them.
Awesome. Well, thanks so much, Troy, for joining the Hemlane Hustle today.
Thanks for having me.